Hi, I'm Jonas Max Ferris. I'm an investment advisor in Miami Beach, Florida. Getting contacted by a lot of clients about this Gamestop situation and the apparent bubble in the stock market and if they need to worry about it and do something to their portfolios. And I also thought maybe this is a good time to do a video, let everyone else think about what I'm telling clients. And I don't work with short-term investors, but I think there's some learning in this as well. Basically, there is some problems in the market. When you see this much speculative mania building in particularly stocks that are not worth anywhere near what they're trading at, it's usually a bad sign. The last time we had an episode that was this bad with the individual stocks was in the late 1990s with dot-com stocks and also penny stocks and various other speculations. And there was a lot of market manipulation, a lot of fines paid, and it basically was a sign that the overall market was overpriced. And eventually, many of the pumped up stocks went to zero, but the whole market was down about 50% before all was said and done, and higher growth stocks were down 70, 80, 90% across the board. So the reason why this impacts a long-term investor is, you could have been in a fund, a technology fund like a Janus fund in 2000, thinking it doesn't really matter what's going on with the chat rooms, and in fact, your portfolio would then fall down 80% in some cases. So this could affect everybody, not just those on margin in a Robinhood account speculating on GameStop. It also, I think, is important for people buying these individual hot stocks to realize that they're getting into a battle they are probably going to lose, and the media and the politicians are taking their side, but that doesn't mean they're going to win. And I'm going to get into some of the problems with this speculation in a second. In general, my investment philosophy is to avoid bubbles. When there's bubbles going on, you don't want to be in those areas that are hot. You want to move your money into the underperforming, less popular investments with investors. Doesn't mean you just want to buy losers, but you want to avoid speculative manias and hysteria and overly optimistic investors. In this particular case, I don't think people fully understand what's going on with this. So what's basically happening is you have a bunch of online investors. A lot of them have these pocket app casinos, basically, where they have a margin account. They're steered into a margin account by the broker. It's very easy to buy, and they also use options. They are commission free, which is very good in some ways, but very bad in other ways, because it encourages frequent trading. And also there are costs to doing that are kind of hidden, where the Robinhood in this case sells your order flow to a hedge fund often to basically make money off your free commissions. But what's going on basically is the investors, the small investors, the not so small, some of them have $30 million apparently from the stock going up. And some of these hedge funds have lost billions of dollars, but they're targeting stocks that basically have high short interest. That means a hedge fund will look at a company like GameStop and say, wow, they're going to be out of business in 5 years. Let's just short it now and we'll make money in advance of that. It's the sort of thing they would have done with Blockbuster, Radio Shack, and all these other kind of old businesses that were once something and got into a path of a slow death. What a hedge fund does, or just a large investor, typically, and they can do this with derivatives, but what's typically done is they will borrow the stock. They will actually borrow it from Robinhood because they put you in a margin account. They can lend out your stock to a hedge fund. They will, let's say, sell GameStop, the hedge fund, at $10. They will pay a lending fee because they're borrowing it to Robinhood. Robinhood pockets that money, doesn't share it with the customers, so they are incentivized to have their customers in speculative stocks with high lending fees. The hedge fund's like, well, in a few years, GameStop's going to be shutting down stores, blah, blah, blah. We'll buy the stock back for $2, $1, or maybe we'll wait till they're bankrupt. And then we've made this money. Now, what has happened that seems like a fairly reliable bet, that stopped being a reliable bet because speculators working in kind of collusion in chat rooms are bidding up this not very valuable company into a high valuation. A few days ago, GameStop was up to $300-400 a share at the same market cap, which is the value of the business of like a Best Buy, which is not going out of business in the near term and is profitable, or has been. So this seems like a great strategy. Little guy taking billions from a hedge fund who is trying to profit from a business, an old American business going out of business. That's a good story for the media and politicians, but in reality, it's not so straightforward. First of all, the individual investor, knowingly or not, is engaging in market manipulation. Now, that doesn't mean they're definitely going to get in trouble for this, but when you group together with investors for the sole purpose of moving a stock price, not because you think it's a great deal or the company's going to come back, and you're targeting another investor to manipulate, to, like in this case a hedge fund, to cause losses. That is basically market manipulation. If the hedge fund did it to the small investors, and I'm not saying they don't, it would be if they shorted a stock strictly because Robinhooders had a high position in a stock with a lot of margin behind it, and they were forced to sell, that would be market manipulation, especially if they got together with other hedge funds to do that. Now, that doesn't mean that's how this is going to end. That is just something to consider. The bigger problem is this company is not becoming more valuable. Only the stock is going up in price. And that can't end well in the long run. In the short run, it's like Bitcoin. It doesn't matter what there's no fundamentals. We're just trading it at a high price. And if we keep owning it and never selling it, well, it'll always be a $400 stock. Maybe it'll be a $1,000 stock, and all the hedge funds will lose billions, and we'll make those billions. This is the problem. It would require the hedge funds to all cover their shorts, which means buy the stock back at $50, $100, $200 a share, and the people on Reddit to then sell to those into that and profit. That's a lot of ifs. First of all, there is no signs at this point that the hedge funds are out of this trade. Now, maybe some got wiped out and couldn't raise more capital, didn't borrow more money to handle the losses, but other hedge funds will be like, wow, this company, which is still going bankrupt at some point, or at least greatly reduced size, is now trading at $30, $40, $50 billion valuation. We're going to make even more money shorting it. So even bigger hedge funds will come and they weren't even to short the stock, and they might just increase the short position when the other comes out. So there will always be a large short position in a stock that is wildly overpriced relative to its likely future. So at some point, maybe one hedge fund loses, another will win. Because the Gamestoppers, the Redditors cannot keep this stock at a high price forever. Now, there are ways to do that, but they don't seem to be operating in that way. First of all, they're diversifying their bets into other speculations, like shorting silver, which doesn't even make any sense because there really is no large short positions in silver. There's a myth, a conspiracy theory, that there are giant short positions as silver is being manipulated supposedly by central banks, JP Morgan, etc. But these are myths. There's no proven large short positions. So there's not going to be massive short covering with some future profit. Now, that doesn't mean a relatively small market like silver can't be manipulated up, but what's the exit plan? And that's the problem with this whole thing. How are these Redditors going to get out of this stock at a profit as a group? Some might get out, but as a group, they're going to lose money because they're buying an inflated asset. The fundamentals of GameStop haven't changed. If the Redditors start buying games from GameStop in lieu of downloading them, like everyone's doing now, and buying their Sony PlayStations from GameStop and everything else, they could turn around this business just because, like as a joke, as a spoof on these hedge funds. And by the way, that would be legal. There's no rules against boycotting a company or spending money irrationally at an old-fashioned business. But that doesn't seem to be in the plan. It seems to be pure stock market price manipulation. And besides the fact, as I said, that can be illegal, it can also end badly because you will be outplayed by a hedge fund. So I don't see why this is going to ever work for the short-term investor, and I don't understand why the press and the politicians are kind of almost encouraging the speculator, almost like leading a lamb to slaughter, like somehow there's an exit plan here that's going to just lead a transfer of wealth of billions from hedge funds to individual investors. That is a myth and a fantasy, and I don't see the path to it unless the fundamentals of the business are turned around, which I don't see that happening. So, we will, for a long-term investor, just to be clear, whether you're in GameStop or not, you probably own GameStop. It's in certain index funds. It's in actively managed funds. You would actually have to go out of your way to get out of this stock. And although that's a small problem, the bigger problem is the whole market is in a low-level speculative frenzy that is going to probably end bad. So, in conclusion, a longer-term investor needs to make sure he's not in funds that are heavily in speculative stocks and should consider lowering overall stock allocation. The speculator in GameStop needs to really consider, what is the exit plan here? Are we really going to make the stock permanently more valuable? And what's the mechanism to do that? And stop shorting things that don't really have short positions, and be more careful. And the media and the politicians need to stop pretending or thinking that the individual investor is magically going to get rich stealing money from hedge funds. Hedge funds play a very complicated game. Sometimes it's illegal, but it is almost always very well thought out, carefully done, and you can't just beat it by adding more money to the other side of the bets. If you're playing a good poker player, keep adding money to the pool of the bad poker player is not going to make the game change in the long run, and I am concerned for those people. I will have more videos on this as it evolves, both primarily for longer term investors, but we'll also deal with some of these speculative bubble stocks. I like to consider myself a bit of a bubble expert, if not just a fan. It's been driving my decisions in investing. I think it's an under-considered element in how you allocate your assets. I've been rating mutual funds for a few decades. I look at valuations, particularly flows of money that cause bubbles in areas, and hopefully try to avoid those areas wherever I can. It's not always so easy, obviously. And we'll be coming back to those kind of topics. Thank you. This is Jonas Ferris in Miami.